Hi, Warriors. How's everyone doing today? Blake, if you have something you want to go to right away on cable, go ahead and take it.
Well, actually, I can, but what we should probably do just open it up to Kman because here, let me grab the chart real quick. Sterling started moving, and Kman was in the chat room just a few minutes ago, talking about the what's happening in front of um, the Prime Minister's office. So what's going on, Kman? What are you seeing?
Well, since the morning, there's been this Prime Minister question session going on, and he was asked about Reeves, and he didn't really fully commit to her staying on. And since then, the sterling is coming already under pressure. And just saw a live update from a BBC reporter saying there's a lot of movement going on in front of the Prime Minister's office. There may be something afoot here that they may be going on the lookout for a new chancellor, perhaps. Sterling really doesn't like it. It started already in the morning, and you know what I said? I don't know if I said it on the show here, but yesterday already. That I let the sterling go because this was a bit of political shenanigans going on, and it seems we're going to a heated point here. All of a sudden, yeah, things could go into a bit of an acceleration here.
Yeah, I mean, look, I mean, first of all, here, let me point this out. Sterling's turned away from the 161% extension. Actually, I was long last week, and I got out ahead of the 161% extension, and man, we've turned pretty hard from there. Obviously, not anticipating this type of news, but Sterling has had very little upside follow through, and I've been quite surprised over the course of the last couple of weeks. Even though I've been playing it to the long side, it just has been kind of lagging. And one of
Well,
the one
mm,
one go ahead,
no,
K-man.
I think it was doing really okay until because of course the euro took a lot of strength from its own position, but sterling was doing all right. But since the end of the month, etc., there's been a lot going on about those chatters about labor rebels and everything, and all of a sudden the sterling, yeah, we had a bit of a failure there above 137.70 as well on the cable, and then the euro sterling low 85s remaining bid. That started to, I think the market started to get a bit worried about the UK situation, and I think in the next hours we may actually know whether Reeves is staying on or not.
Well, we haven't seen anything reported yet on Live Squawk, so this is just kind of an assumption going on at the moment. So I think I find it, rather interesting. I'm personally I'm going to take off just a quick 12 pips out of my euro sterling. I bought it this morning, get in and get out, just on a breakout. But if you were a Forex Analytics subscriber, you can see the euro sterling has been bought on a flag pattern from a couple of days ago. So that's one of the patterns in play that was initiated a couple of days ago, just because I mean, it is a bull flag pattern. I mean, we can't deny that. The question is how much further are we going to rally just in this, as people are assuming stuff is going on. Anyway, Dale, I'm gonna pass it back over to you. We do not have Ryan today. He had to leave, and so K-Man's been covering for Ryan. So I'm going to pass the charts back over to you because I'm sure there's some things that you want to talk about. But I do want to mention also we have ADP non-farm in about 11 minutes. So I'll have to take the
Okay.
charts back over. So,
Okay. All right. Well, thank you for the 10 minutes. So this is all I have to say. King dollar, king dollar. And there were warning signs in cable yesterday talked about it. This was pretty glaring divergence at the new high. All
and we
right.
can't see your chart, by the way.
Oh, I thought I shared it. So, oh, I know what's going on. Hold on.
And yeah, Dale, I'm with you. I've been playing some of these dollar on the long side the last couple of days, and it's whenever you're trading counter trend, it's not the easiest, but obviously the sterling's rolling over pretty nicely here. So.
Well, I think in the next month or so, it won't be considered counter trend.
Ooh, all right.
Okay. All right. So we don't quite have a weekly reversal in the dollar. Um, we should now in cable, and euro's on the verge. But I think this we put in a significant low. 96 was my number. The RSI didn't look good, but I went for it anyway. And you know, of course, we need more confirmation price wise. Maybe we'll get it in the next couple numbers, but um, I think it could end up being a pretty significant top, and uh, you know, 116 and a half in euro or so is probably a bull bear line for me. So
Dale, can I just mention that the whole thing about the dollar, and this has been my argument the last, since the week ahead video and late last week is everybody's betting against the dollar, and it's really everybody's betting against the United States. That's probably the better way to phrase it. And I mean, how frustrating has it been if you've been think about all the economists out there, and I've been using examples of like, Danielle D. Martino Booth or, David Rosenberg and all they're just perma bears, right? And I'm not saying they're not eventually going to be right and they don't have good talking points, but everybody is so bearish the U.S. economy. But what if we just trudge around and, you know, create jobs every month, maybe not blockbuster jobs, but we don't have a recession. And, people have been betting against the dollar so aggressively that how about if the jobs report this week is okay? I mean, maybe we
yeah.
create 80,000 jobs. Maybe we don't have a blockbuster number, but how about if the US economy is not falling off a cliff right now? I mean, I think
All
that's the
right,
big risk right
I'll
now.
give you the how about. So if some of that manifests in the fundamentals, I think you could see 103 in the Dixie in the next several months.
You mean where the economy just kind of trudges along?
Yeah, and look at what yields
Yeah.
are doing, Blake. They
Yeah.
bottomed where I said they could at 420. You got a nice little spike happening here
Yep.
on the 10-year, and that's a pain trade because everyone has basically said, it's a layup for rates going lower. And then you look at TLT, and I tell you what, it failed from a pretty important area to me. And if we start taking out 87, it's going to look pretty vulnerable, maybe even
Uh,
for a new low.
I'm sorry, I just want to mention Chancellor Reeves has not resigned. A spokesperson for Reeves said of her upset, it's a personal matter. So I'm just seeing that right now. That's
Yeah, but
from
it may not be her choice, huh?
yeah, okay. I'm not following close enough. Just wanted to say that. Okay, sorry, Dale. Go ahead.
Well, that's all right. I'm through.
Oh, okay. But as far as the dollar goes, Dale, I'm not I'm dollar agnostic at this point, as I have been like the last couple weeks. I've been riding the dollar bear train, the entire year. And the last couple weeks I've been very skeptical about being aggressively short the dollar, and I still, and even though I still hope the euro reaches for 120 so I can short the hell out of it, now I'm kind of questioning if we're even going to make it. So it's going to be this week, today and tomorrow. I say this week, today and tomorrow are going to be really interesting. We do have ADP non-farm here in just a couple minutes, but the jobs report, the weekly unemployment claims, the ISM services data, all that tomorrow is going to be really, really important for the dollar and what happens in the next week, in my opinion, ahead of CPI. So I'm excited to trade it. That's the great thing about all this data coming out tomorrow, and where we're at right now. I think the market is poised for some pretty good moves, whether it's the euro to 120 or whether it's the euro to 115. I think that is in our immediate future over the next couple of days. So,
Okay. So the
that's what.
yen also went to my target at 43, and it's my contention that the correlation between the 10-year and the yen is back on, and I'm looking for the yen in the next month or so to take out this 148 level. Maybe trade 150, confirmed high. I didn't reverse down here from the short. I wish I would have, but I was already in some dollar stuff and added dollars yesterday. So um, anyway, the I think the yen and 10-year yields are headed higher.
Nice, nice.
U.S. dollar
V-
yen.
Very good. And I'm sure K-Man has something to say about the yen. Maybe.
Yeah, but there's an extra layer there to the yen. If you look at, I know you guys are very dollar centric, but look at the yen crosses. They take away sterling, of course, with what is happening, but the yen crosses are still pretty much underpinned, and I think that has to do with the uncertainty surrounding the U.S.-Japan trade.
Mhm.
Because Japan is kind of playing hardball, and then we heard from Trump yesterday. He's now ready to
There's
have even 30 to 35% tariffs on Japan if
yeah,
they don't play
because
ball.
they're
But
spoiled. He said they're
yeah, I
spoiled.
mean, but I mean, what? Okay, I
They
mean,
want more than one doll for their kids for Christmas.
yeah, but the thing is, Dale. I mean, the where is Japan spoiled versus the US? Where? I mean, just tell me where. I can't see it. I mean, this deal should have been a real shoo-in,
Yeah,
and I think the US is really making a mistake by not making a deal with Japan because it's not only about trade. It's about geopolitics. It's about
yeah,
Japan being the ideal partner in Asia. I mean, let's not forget it. And I think it's a big mistake not to make a deal with Japan. But okay, but I do think that that plays somewhere against the yen as well. If you look at it from the cross standpoint, the dollar is the dollar is perhaps the dollar has ran it perhaps for now its course lower. We are correcting for the time being. We have to say it's just a correction, of course, but yeah, I think if they don't find an arrangement, yen could weaken indeed a bit further. If in turn they have a last minute thorough agreement, not just a loose one, but a thorough agreement, then the yen would strengthen again. But we will know. Akazawa is or Asakawa is back into Washington over the weekend, and I think obviously the next 24 hours are going to be important, but especially the run up to the 9th of July is going to be extremely important for everything yen, in my opinion.
yeah. Should be wild next week.
It should be, because if they
Yeah,
don't find an agreement, the yen can weaken 2-3%. But if they all of a sudden find one and Trump wakes up to Japan as their trading partner, don't forget it's their biggest investor in the US as well.
treasuries. Yeah,
It's the biggest investor in everything. I mean, they want to build more manufactories and stuff like that. I mean, and I don't get it, but
yeah.
anyway, it's
And
going
they
to
and he
go.
just approved that deal for them to buy this what Bethlehem steel.
Yeah, US
That
Steel. I
finally went
mean,
through.
what
U.S.
is that
Steel.
all
Yeah.
about then? You agree on one thing and then you shut the door on the main stuff. I don't get it, but anyway,
Sounds like a male-female relationship.
haha, could be.
Hey, Dale, by the way, I'm going
All
to take over really quick just because of the
right,
data.
man.
Okay,
Go
sorry
ahead.
about that. But you guys
No,
can
it's
talk.
okay.
I just need to get us ready.
All right.
So here is,
A
by the way,
minute.
here.
Yeah, we got a minute to go to the ADP.
Yeah, I'm going to pull up the data flash from Forex Analytics. Let me move that out of the way. Here's the charts. I have yields. Since I agree with Dale, we need to be focused on the. Here's the 10-year yield over here to the left. There's the intraday dollar chart, which is ripping thanks to sterling, and then you have the S&P is this kind of consolidating right through here. Dale, we do have data coming out in a few seconds, but how do you feeling about the equity markets while we're here?
Uh,
I mean, we're at all-time highs.
I
What do we
mean,
do?
there's certain things that like Palantir, I put out sells on last week. That's pretty weak. Um, uh,
Because no one
Nvidia
knows what the
had,
fuck that company does.
but everyone owns it.
Yeah,
Uh,
and no one knows what it does,
I
including
know.
me.
Pep,
What the hell?
pepper
What
in
the
your
hell? Here we
mouth.
go. By the way, I'm sorry. I'm sorry. Here we go. Heads up.
I haven't seen it.
Me neither. Uh,
Minus 33.
oh, so very weak number. Wow. And the euro
Oh,
just went
oh,
screaming.
that's a weak one.
That is a weak one. That's gonna throw a little
It was
what the
only
hell do
king
we
for a day.
the dollar was king for a day. There you go. Look at the dollar index really
Hmm.
coming under pressure. But again, that's going to throw everybody for a little bit of a loop tomorrow. And let's not forget, guys, that here. Let me go over to the euro just so you guys can all see it here. This is really critical support. I know we just tweeted about it, just and updated Forex Analytics about it. I mean, this is 107, 117.50 channel support. It's the breakout point of the wedge. Again, if you are following along, you were notified just when we were coming down here that this is big channel support today, and this data is holding us above there. Now, whether we break that tomorrow has probably more to do with what that has more to do with the non-farm payroll tomorrow on this ISM. But what's your initial gut thoughts with that number came in?
Tomorrow or
No,
the
no, no, just
18th?
with the ADP that we saw.
Well, I haven't seen the breakdown yet. I would love to see the breakdown. Where did we lose the most? So it's the small employees have been losing the most. The smaller ones, yeah, it's the small ones. It's professional and business services, education and health. Here we go. Minus 50 grand, minus 50,000 each. Financial activities a bit lower. Yeah, we always say it's not necessarily a front runner for the NFP, but a negative report is a negative report on the other hand, right?
Yeah.
I don't know whether it's a real front runner for what's to come. I really don't know, but yeah, that is going to give the callers for a weaker job environment. That's going to strengthen their calls, I guess.
Well, if we have some higher inflation and weaker growth, well, higher inflation, let's just assume the Fed is right at this point in time, or actually we can assume that Steve is right, which Steve is here this morning. If let's say we have higher inflation, slower growth, that is a nice stagflationary environment, which is always good for stocks. I mean, stocks tend to go to, you know, 30 times multiples when you have stagflation. I'm obviously being sarcastic. Steve, good morning. What are you thinking as you see this data cross the wires, and how are you feeling about what you're seeing here?
Good morning, mate. I haven't seen anything that would change my mind at the moment.
Which is
I I I need to see a lot more to change my mind about what is happening, and of course, the tiny rebound we're seeing in the dollar, in my opinion, doesn't really move the needle.
okay. So the dollar you still think is in a really really strong downtrend here, and nothing's changing your mind not to be bearish the dollar.
Nothing has changed my mind. A lot of things can change my mind if we're talking about the short-term horizon, of course, and only. Having to do with the longer term, no, not really. Having to do with the shorter term, yes, things can change temporarily, of course, right? But do I consider today's minor move being the indication of some kind of a game-changing move? No, no, not at all, not yet.
Okay. When you're looking at the dollar and Dale, we've been really talking about this long term, 96, dollar level on the dollar index as being such critical support on a weekly basis. And we're finally here. And Dale, I have to agree, you and I are doing what we thought we would do when we get down here, is playing the dollar a little bit to the long side. Now, actually still own some dollars, and my US dollar Norwegian krona has not even pulled back, not even a little bit. It's actually
Yeah.
slightly higher today. Regardless of this data, I think this is going to be really key. This is going to be like kind of do or die for the dollar around this 96 level. Wouldn't you agree with that?
Yeah, I know there are a lot of people were talking, I don't know, 95 because they had they did, if you leave that chart, go back to the left on the first break, because they counted from the 114 level. You could go 100 or you could go 98. If you just do this, then you have equality. But if you take into consideration these lows, and Greg has brought it up, that'd be like a 94 handle to have equality to the low. So, that's the argument for different levels. But
Yeah.
yeah, it'll look like a breakdown on a long-term chart. But sometimes it depends how thick your pen is for those trend lines.
Sure, and I always like to explain to people when I'm looking at a trend line or levels, I mean I'm just me, and I tend to be pretty effective when I draw them. I mean that's why there's been people in our chat room for 20 years that like to listen to my analysis every day because I tend to be pretty good at it. But I'm not Goldman Sachs and I'm not the head trader at Morgan Stanley and I'm not, so I'm not, I when they have their trend lines drawn a certain way, they tend to have a little bit more clout than little old me. So I adjust things on the fly just as most of us do
Yep.
because it's an approximation. If technical analysis was an exact science, we'd all be a gazillionaires, but we're not. So we have to be flexible with what we see on our charts. But also, what I found, especially over the last 20 years of my trading, is found that macro has a lot more to do with the markets than my little squiggly lines that I see on my charts.
Yep.
And that's the important marriage that we do here at Forex Analytics, and especially when you're in the chat room and you're talking about what people are trading, why people are buying things, getting in and out, because we're sitting in the general chat room here talking about the whys things are moving and why they're going up. And by the way, Amir, that has got to be one of the funniest pictures I've seen yet. So thank you for your entertainment this morning in the chat room. This is the reasons why are so important to me, when I'm trading. So anyway, make sure you guys are in the Forex Analytics chat room to discuss those types of things. And I have to mention this just because I found out about that this morning. If you guys didn't hear, we have just a couple of days. It's supposed to be from the 3rd, July 3rd, through July 7th. So that's up until Monday. We're having 30% off on our trader funding program assessments, even if you want to get into live funding, or live funding, I'm sorry, instant funding. But I found out from our support today that actually that discount code is working right now. People are actually putting it in and it's already passing through. So that means if you want to get started on trader funding program and take advantage of the 30% off, you don't have to wait till tomorrow. We've already had multiple people come in and put in the discount and it's going through. We're all scratching our heads saying, "Oh shit." So anyway, it's only good for a few days. If you haven't seen the video on it, I think it's circulating around. So take advantage of that discount because this is a very, very extreme discount that we're offering the next couple of days for the trader funding program. Well, we have a few minutes before Dale, your interview. I want to ask you today, now that you've kind of seen what you've seen, what are you going to be doing here? I'm thinking that the euro is going to be a decent short if we can peek our head back above 118. I still think that we're going to be kind of sideways going into tomorrow's jobs report, which is going to be obviously the most important thing. But what are you thinking as we go into today's trade?
Well, we'll see if 96 holds. That's a big deal to me right now. And if it doesn't, maybe the only thing that bothered me about yesterday was the confirmed low on the 4 hour. So, if we make a new low, it won't. But now it looks, unless we have a strong number tomorrow, we're not going to get a reversal week. So, some I did a lot in the last couple of days as far as positions. So there's nothing I'm doing except holding. to see if I'm right, took partials, and let the market do what it's going to do, and I'll react either at new lows with a divergence or maybe over today's highs might be an add. If you look at every low, especially in the euro, if it takes out today's low, it's vulnerable.
Right. But with today's data, I don't know. I
You're not
mean,
going to do
that's
it
for,
today.
yeah, it's for tomorrow,
Today's
right?
done. Today's
Right.
done. You know,
Okay. All right.
that's the way I see it.
Got it. K-Man, what are you doing today? What are you thinking?
Um, well, my overall bias hasn't changed. So I did let my euro go yesterday, bought it back yesterday evening, around 117.65. But it's a shorter term play than I would usually do for now because I want to see tomorrow's jobs report, obviously. For the rest, I'm not doing a lot. The only thing that I keep on noting is that we don't get our silver Dale in the low 35s. And every time we have 35 print, whether it is 35.80, 35.60, we immediately see buyers again in silver. And that is one where I was eyeing to try and add again to my reduced long-term positions, but we just don't get it for the time being.
Yeah, and that, that is the 38% retracement right here at this
Yeah,
35.20s.
it's a big break
It's
level,
yeah, it
big break
looks
level around
really, really
35.
solid.
Call it 34.80 up to 35.15 or so. It's a big zone. But it doesn't even get there. That's a bit annoying. But for the rest, I'm not looking to do much right now. To be fair, yeah, sterling is a rally seller. Whatever you do it against the dollar or buying dips in euro sterling, perhaps. Because that one now looks sterling looks fragile, right?
Sure
And
does.
we had a little bit of an initial discussion in our flow room, but we're a bit wet finger up in the air as to know who might be a replacement if Reeves were to be uh, were to be sidelined.
Oh man, that could definitely keep some pressure on sterling. No, but,
Uh,
traders and investors, they don't like the unknown. So when it's unknown, they'd rather scratch it and then come back to it when they have more information. So that alone could keep sterling under pressure. So thank you very much. And
I think they're
go ahead.
considering Pierce Morgan for
Yes,
prime minister.
exactly it.
You
Pierce
like
Morgan.
him, K-Man?
no comment. No comment if I may.
All right. Steve, you have anything on your mind as we go into today?
Ringo Starr.
Not really, mate.
All right. And I'll just tell you guys right now, Lagarde is speaking a little bit the closing remarks at that ECB forum. And by the way, K-Man, did you learn anything new
Yeah, I
from
mean,
the
that was maybe one interesting thing yesterday, but it's a bit of a follow-up of what Powell already said on the when he was in front of all those committees, right, last week. He
Mhm.
does not completely shut the door on a July cut because he has been saying, and there he keeps the same line, that they don't know, they're completely data dependent, obviously, but it
Tariffs.
could change relatively quickly. So that probably makes our tomorrow's NFP report even more important, because this is one of the pillars of their mandates, right? If the jobs market starts to weaken, they are going to cut earlier than what most people think. That's my
And boy, he could get Trump off of his back for a little bit, so he stops sending him all
yeah.
these love letters. Hey, I just want to since he's here, Steve, do me a favor, take a look at some of our team's chat. We're getting some questions from our development staff, so just FYI in
Okay,
case you
mate.
hadn't looked. Okay, so guys, we don't have any data coming out right now, but Dale does have an interview. I just want to mention, great time to get involved in the trader funding program is the next couple of days. If you're new to the program and you take advantage of this offer, I'm also going to schedule a 45-minute one-on-one consultation with you. This way, it can kind of give you what all the tools that you have available to you with Forex Analytics in our chat room. How do you get to it? Kind of some strategies on how you trade the market, but more importantly, how you might be easier pass an assessment based on how you trade. So if you want a little one-on-one consultation with me, I try to meet with everybody that's new. Some people I think, are like, nah, I got it. And they'll bypass that. But 95% of the people that are new to the program, I end up meeting with. So I'll send you an email once you get started. And with that being said, K-Man, thanks for covering for Ryan today. I know you're a lone wolf today on the Flow Show. So if you guys aren't listening to the Flow Show, make sure you are every day. Steve, I'll see you on the Morning Edge in about 45 minutes. And
Bye-bye, mate.
Dale, I'll pass it over to you.
Thank you, buddy. Thank you, Blake. Kman. Thanks, guys. All right. So we have, if you're into precious metals, you want to stick around to hear Bob Coleman. Bob, welcome back to Face. How are you?
Good deal. How you doing?
Good, buddy. Good to see you. So, I catch a lot of your posts. Anything going on supply wise that, you were way on top of before we had this squeeze and huge move in metals about lease rates going up and not having the correct type of silver for deliveries. Has that changed or has it been exacerbated in the last few months?
Yeah, there's too much metal, I think, on the exchange at this point. And it's something I've been picking up on. I mean, you still have the industry is still seeing quite a bit of slowdown. Just I'm talking about retail and wholesale coins and bars. 2 weeks ago, it was really, really bad. The bids were pretty much discounts on everything from the wholesale level. So,
Okay.
which Gold Eagles, almost 1% under spot. I mean, it was stuff that you see when you see a wave of selling coming in, and it just seems like
That's really
that.
strange,
Yeah, this
isn't
this
it?
is not the Bitcoin laser eye diamond hands rally. This is let's get rid of this stuff. It's hot trash, and pass it around as fast as you can. The hot potato scenario. It is really wild. I mean, I've never seen a bull market go up as much as this has, and you've just had so much disdain to it. And then of course, platinum, going
Yep.
absolutely nowhere for 15, 20 years, and all of a sudden it breaks out.
Yeah,
And
that was a great call. You made that. Uh, some of the people that bought it, I think you were talking about the volatility of the metal, that if it was too much for people, that there's an alternative. What was that tweet about? Do you know what I'm
yeah,
talking about?
yeah, basically, it was for, the conservative side of investing in metals is just simply buying the metal. So therefore, you don't have, market risk. Or I shouldn't say market risk, but systemic risk, counterparty risk,
Mhm.
management risk if you're going into mining stocks, and all these other types of things that can affect your typical securities investment. Whereas the metals are just simply, hey, if the price is going up, the metal should rise as well. It's kind of a no-brainer. Some people like to use ETFs, which is fine because the cost to get in and out of these things are
Cheap.
much lower than buying the physical. But the other side to a platinum ETF is it's a very small market, and when the volatility comes in, those funds can go to pretty wide discounts and premiums to NAV on top of the
Okay.
very high management fee.
Okay. Uh, Interesting. Yeah. Let me ask you this: but dealers that carry a lot of inventory, do interest rates matter to them? Are
Oh
they
yeah.
financing? Do you finance your inventory?
No, I
Okay.
don't. I don't.
Okay.
It's one of the things that earlier this year when finance or even last year financing costs went up.
Yeah.
And and a lot of dealers obviously were getting pinched with those higher financing costs, and of course the tariff thing issue, EFP blew out, and you had lease rates go up and so forth. That also impacted a lot of the monthly costs of dealers. Um, it's I would
There,
say that rates pulling back a little bit has helped a little bit, but the problem is dealers are heavy inventory, light cash at the moment. So
okay.
that they're kind of forced, and the way the industry works is most people work off lines of credit. The lines of credit force them to hedge, so they're going to
Yeah.
have to increase those carrying costs just due to the volatility of the price action.
Okay. It's a tough business, almost like being a farmer.
Yeah,
Yeah, you have to
similar.
hedge your
Yeah,
crop. Only you don't have bad weather won't hurt your product.
yeah.
That's
The
your
tough
advantage.
Yeah, yeah. The tough thing about the retail precious metals industry from a consumer standpoint is the massive costs of getting into the way they were charging
Yeah.
and just the way the industry operates, getting into product. And now the last year and a half, what has saved the retail dealer environment is the massive discounts to the spot price when people want to sell back. That's the unfortunate thing. People are seeing, almost 10% uh, 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 uh,
Yeah.
discounts to spot why they want to sell back. Like for example, most silver products. It's unfortunate because we look at the precious metals as potentially as an investment class, but it's not treated like that. It's there's a lot of uh, there's no best interest, best efforts basis to provide some type of fiduciary support to the customer. It's all every man for himself type of thing.
Okay, so like silver, let's say silver's trading at 36 right now, and I'm a seller, and I know that different products bring different spreads, but on average, if I'm a seller of silver at 36, what's going to be the bid?
If you go to most of the big online retailers, it'll probably be like, say, for example, a 100-ounce silver bar. It'll be $2.50 under spot.
Okay, so you would get 33 and a half on it. Yeah, that's pretty
Yeah.
big.
Yeah, and not to mention if you bought it between 2020 and 23 when silver was say $22, $25 ounce, you probably paid $4 to $5 over spot for that same bar.
Wow. Okay. All right. Well, that didn't happen to me because I bought I don't know some half of my position from you.
Sure.
So that's something for people to take into consideration. Really, shop dealers check Bob out, and you don't even have to take delivery because you could rent it an apartment in Idaho and let your metals live there. Um, so you want to talk about the security of people holding things in your vault,
Yeah, I mean
company's vault?
yeah, I mean and it just doesn't have to be me, but anyone that's looking to store metals versus, for example, investing in ETFs or in structured products, especially with more of this volatility and so forth. You see every price tick higher, you're seeing people selling into the market, and most of these depositories, if not all of them, are owned by a gold dealer, financial institution, or cash in transit company. So they're transaction oriented based in terms of their revenue model. So when you start to see things impact the market and impact transactional revenue, it impacts the depository side of most of these companies is more of a side business. It's really
Okay,
supported by the parent company. So those are certain things to watch for when you're looking to have your stuff professionally stored or getting into a structured product, like some of these popular, digital based, they call them decentralized, but they're really centralized programs or securities. Just be careful, read the agreements. They're going to tell you everything. And you're seeing more and more of these. I don't know if we talked about last time, but these waiver of jury trial clauses and other types of limits of liability clauses that are really starting to pop in to a lot of these contracts, even on the amendment and addendum side, where they just post them to the website as a change in the contract.
So it'd be arbitration only instead of being
Arbitration
able to.
only. Yeah, and some
Yeah.
of these instances may even limit the liability to a certain dollar amount. So I've seen it where you can't go more than $10,000. Even if you invested $1 million, your maximum limit of liability or their limit of liability is 10,000. So it's a tough thing because we just saw and I posted this a couple weeks or last week I think it was Robert Higgins, who owned First State Depository. Was found guilty on all charges in terms of, I believe it was fraud or theft, where about 76 million, I think, or CFTC, I think, claimed 115 million of metals stolen out of the vault over the course of 10 years or so. Well, he was found guilty on all charges, just sentenced last week to 65 years in prison. I think he's 69 years
Wow.
old,
That's
$76
it.
million restitution. Um, and that was a depository that stored on a segregated basis. But the problem is he was also a dealer, and the unfortunate thing, it's one of the reasons why I keep it very simple on our depository. It's not owned by or associated with a gold dealer, even though I'm a registered investment advisor and I buy and sell metals underneath that company. I'm not a dealer, so I don't want to take the conflict of interest and potentially overlay that with the depository, and that's unfortunate because a lot of people are learning either the hard way or they're learning, wow, I paid higher cost to get into this product, and now all of a sudden, as things are slowing down, what other risks am I looking into? Because the last thing you want to do is move your metals around. The cost of logistics has only gone higher, so these are things to watch out for when you're wanting to invest in precious metals for the long term.
All right. You have any? I know it's not your wheelhouse, but you have levels that are important to you in both silver and gold, and any kind of bias. You've been in the business for a long time. Do you think we're going to have this typical summer slowdown in appreciation of both gold and silver?
I would say seasonally, normally that would happen, but I don't know if we're going to get a seasonal summer slowdown with President Trump.
Yeah, and I
That
hear the ceasefire has already been broken. That
you got the big beautiful bill. I mean,
yeah,
yeah, you got tariffs now back in the headlines. I mean,
yeah,
they're on, they're off. It's yeah, this is I
Ju-
think this adds to the complexity and a lot of the frustration out there. People don't want to buy the metals, I should say the US retail side. Maybe the idea is that, hey, I don't want to chase this stuff, it's too volatile, it could really come down hard if the market pulls back, but then this thing just keeps grinding higher. And
yeah,
the story now is really about the dollar, I think, more so
right,
than the light activity that we're seeing in the coin and bar market. And you also see this with the open interest and the volumes on the COMEX. I mean, you're seeing very, very light interest or light volume activity. You're not seeing these
mania.
EFPs. Yeah, they've totally normalized. So things have just gotten just really, really quiet.
Okay, so I was going to ask you about tariffs. Um, any impact on the precious metal industry? Could it?
No, it turned out to be a big dud. And it's odd that you mention it because over $500 million, was it $500 million dollars were made by the banks in the first quarter of the year, by playing this widened EFP, where they took advantage of the arbitrage between the futures price and the spot price, where it really blew out. It turned out that the banks basically were pouring metal onto the exchange, selling against the metal on the futures contract and grabbing that massive premium. So it feels like the sense is that these Trump's these tariffs were really just a lot of talk at the time, and maybe designed to bring GDP numbers down because this influx of gold doesn't really count toward economic activity. But it does set up, this idea of a potential artificial slowdown, the way GDP numbers are calculated, so you could try to get interest rates lower. I mean, there's a lot of management and sort of I don't want to say manipulation, but management of the markets, by obviously this administration to try and get the things they want passed. But that's no different from any other administration.
Yeah. So gold silver ratio, I thought it had peaked and it's come down pretty hard. But look where it's holding. So I know some guys that say there's going to be another shot up here for one more high, which will favor gold over silver. What would you do with 100 in cash? Would you go 50-50 gold silver now? How would you break it down?
Well, I mean, the hedge fund that I manage it's still very heavily weighted to silver. So it's
Okay.
probably 70% silver, 28% gold, and 2% platinum. I started to take that platinum position. The odd thing about platinum, which you don't really understand until you actually start trying to get into that market, is it is very, very small. Just buying a few $1 million of metal, of platinum, basically at the time back in March and early April, wiped out
Yeah.
pretty much everybody, any larger bar size type products out there. It was just that's the nature of that market. It's 20 times rarer than gold is. So it's just it's tiny. So, but yeah, obviously when money comes into the sector, it can really move, and that's obviously what we're seeing with platinum right now, is just money flowing, not just maybe in the United States, but more so over in Asia. This idea that, hey, listen, I'm not going to buy this 10 karat hollowed out gold necklace. I'm going to buy platinum. It's a
Yeah.
third of the price.
Yeah, it used to be at a premium to gold. Palladium catching a bid. Any people calling you about that at all, or that's a little too esoteric for most people?
It is. That's even a smaller market, wider
Yeah,
spreads.
right.
Yeah, it's a much, yeah, that market, rhodium, those are just very difficult markets. You don't see a lot of activity, and there's not a lot of product out there either. So it's just there. Palladium is really an industrial metal. Platinum industrial, and does have that jewelry component.
Okay. Any inquiries about some kryptonite?
Well, yeah, not, yeah. Are you looking, I guess, at the Bitcoin treasury reserves and
Oh,
everyone just
okay.
going all in, or
Yeah, yeah. No, kryptonite was, Superman, the only thing
yeah.
that could take Superman down. So I know the new movie's coming out. I was thought maybe some.
Oh, okay.
All right, who knows? I mean, because I don't even think kryptonite would affect our current president. So, why don't we talk about what levels you think silver can achieve in the next couple of years? Are you in like the $70 camp that we could double again from here in the next couple of years?
Yeah, I think that's entirely feasible. And the these metals, the smaller markets, they tend to be, they languish for a long period of time, and then they just go up like a hockey stick. And the hockey stick side of the move it goes up when everybody least trusts it, and that's
Yeah,
because they've been worn out over a period of time. And platinum is an absolute uh, example of that, where 15 years going into this sort of wedge, I guess, and it just grinding people into the ground, and then finally one day it just happens to take off. And so you get this massive blowout of this wedge, and the first thing people want to do is sell into it. There's like, this is the worst thing in the world. I'm glad I finally got out. I've sat in
yeah,
this thing forever while everything else has gone up around me. And that's actually, that's the same sort of influence and same market sentiment we saw basically back in the end of 2023 with retail investors in the silver market, where they were just absolutely disgusted. They overpaid for premiums, from 2020 to 2023. They were promised that the metals were going to go to $500 an ounce, and they never did. And so by that grind down, they just were like, this is enough. I'm just going to sit on it at this point. I'm not buying anymore. I'm done with it. And that's when, of course, things start to move. And that's the setup that we see here. It hasn't changed. I mean, we look at this big beautiful bill. I mean, these deficits and so forth. They continue just to give away money. This is the name of the game. It's inflate or die, and that's why we all bought metals in the first place, was to try to protect ourselves and our purchasing power.
So, how's your fund doing with the bull market in metals? And is it a public fund, not like a public hedge fund, but can people that you talk to and you meet in your tweets and interviews you do invest in it?
Yeah, it's a Reg D Section 506 C fund, so it is for accredited investors.
Okay.
Minimum investment's 100,000.
Okay.
I don't use any type of hedging at all. So it's purely long. The fund's obviously having a great year with regard to the price action. I've been in March. I started to buy March and
I
early April. I
remember.
started to weigh heavier into the white metals than into
Right.
gold. And so
Yeah,
that's
great move.
yeah. So that's the difference between sort of a passive style where people like to buy a certain percentage of metals and just hold that percentage, and then look at maybe the price action for an exit strategy. What I try to do is I don't overtrade. In fact, I very rarely trade the fund unless we get to extremes on certain things, and then you try to make some positioning moves to take advantage of those extremes. But it is accredited investors can come into the fund.
Okay. All right. So if you're rich, I saw Bob talk to him when he was going heavier into silver. So he's got a real good feel for the market. And this fund is buying physicals, right?
Yeah, it's designed to have metal in small deliverable form. So gold side, the largest bar is a kilobar, the smallest is a gram bar, and these are all good delivery bars. Silver, yeah, it has junk coin all the way up to 1,000-ounce silver bars, but most of it's 100-ounce silver bars. The platinum, I tend to try and buy 10-ounce bars or greater up to kilobar size. But the idea behind it is, if client wanted cash or distribution, they could take it in cash or in metals. I already have it in that small deliverable form, which is unlike any other fund in the world. And so most other funds will just hold large bars. You want the metal, you're going to have to either take those large bars, or maybe some funds can break it down and rebuy or remelt that into smaller product. But the problem is, when you want to remelt these products, that's when everyone else is wanting to do it at the same time. So you have a degree of risk there of trying to get that smaller product size. That's the advantage that I have. Is I looked at all these things back in 2006, 7, and 8, with the idea of buying uh, fully deliverable products in good delivery form right off the get go. So that way I can sell into this. If retail is buying and premiums are high, I could take advantage of that as well. So.
All right, Bob. Well, uh, I've learned a lot about that side of the business from you, and talking to you, and I think that people, uh, you know, should own some. And if you don't feel comfortable, having it, possessing it where it could get stolen, this is a great option. And also, Bob has a pretty good feel for the market. Uh, so follow him at the minimum at Bob at Profits Plus ID for Idaho. Um, Best way for people to reach you, Bob, would X be the way?
Yeah, X, they could direct message me. Just go to our website. There's our phone number that's on the website, or we have like an info at goldsilvervault.com, and also a contact page where you can type in and ask questions, and we'll reply back. But we also get involved with also transport. We do a fully insured transportation, whether it's through couriers or our own armored vehicles or freight. So people wanting to move out of certain jurisdictions or move from a program or move from the COMEX or anywhere, we can help with that and organize that transport.
Okay, you have a fan here, Parth Majithia. So, you have fans wherever you go. I suggest you get some photos taken, 8x10 glossies, and autograph them and
Sure,
send them out to your
we'll get
clients.
into the merch business.
Bob, always great talking to you. We'll talk again in the fall. I hope you have a great summer and that the industry, that you thrive through this
Sure.
process that we're going through now that we're in the end game of whatever is happening. The dollar, I think, is going to bounce. So we'll see if the metals can fight off a strong dollar. They have before, and no one's talking strong dollar right now. Just like no one was talking hitting Iran and a spike in crude 4
Right. Oh
months
God,
ago.
you nailed that. Oh my God,
So
that was a call.
yeah, so anyway, a broken clock is right twice a day, so I better end the interview before, the little hand advances. Thank you, Bob. Really have
Sounds
a
good.
great summer. Have a great summer, and uh, I'll send you a DM and we'll set something up for September.
Sounds good. Thank you, Dale.
All right, Bob Coleman, everyone. Follow him or go to his website at goldsilvervault.com. And that's going to be a wrap. We'll end the week tomorrow with the big number, NFP. Looks like the dollar has recovered and cable's really getting slaughtered. Okay, so I could say it again. I said it at the beginning of the show. I'll say it again now. I know it looks feeble, but I think everyone's could be chanting King Dollar, King Dollar. We'll see. Adios, everyone. Don't just count your currencies and coins, count your blessings. Great having you on, Bob. Post your handle. All right. See you, Will, Parth. Everyone, adios. There it is.